This is a pretty complex deal. Tell us how it all fits together.
That's right. This is a bit of a slow-moving merger. Under the conditions of the agreement that the companies have arrived at, both Naver and SoftBank Corp, the SoftBank Group's telecom unit here in Japan, will buy out all the existing shareholders of Line, which is the dominant messaging service, not only in Japan, but also in Thailand, as well as Taiwan. As a result, at the end of it, hopefully by the end of next year, Line, as well as Yahoo Japan, which is now owned by SoftBank, will become one entity, combining operations, sharing costs, and hopefully producing some synergies. So with this new agreement and the new price of 5,380 yen, it sounds like they're finally narrowing in on a final offering price, even though the actual TOB will not happen until May or June. It has not been completely decided. But there's still some regulatory issues. I mean, the next step is convincing regulators in Japan here that the moves are not anti-competitive, and the main area of concern is cashless payments. Both Line and Yahoo Japan's PayPay compete head-to-head in this new space, and the government is very keen on cashless payments taken on in Japan, so it'll be interesting to see how they respond.
Pavel, in terms of some of those synergies you describe, how does this fit with Masayoshi Son's vision of making an AI tech company?
Right. I think when most people hear SoftBank and they hear Masayoshi Son, they're talking about SoftBank Group. I mean, Son has long since moved on from managing the domestic operations here, the wireless and broadband services. But this business is still extremely important to his strategy of investing in startups. It's a major cash source for the company, and profits domestically are what really founds his investments together with leverage. So a lot of analysts see it as a really good move. SoftBank has kind of hit peak growth. It's a mature market in terms of wireless offerings. So their so-called beyond carrier strategy, is seen generally as positive, looking to expand into other areas. And there was a time where Yahoo Japan was a dominant internet company in this country. But since then, companies like Amazon and Rakuten have little by little taken bits of its business. So it seems as a bit of a revival bid that might have legs.
Pavel, but of course, you and I have been talking extensively about some of the investments made by Masayoshi Son and his Vision Fund and how they've really fallen short. Are we going to see more scrutiny on his future deals now?
Well, you can bet on it. We're certainly working on stories that will continue to look at his portfolio. I mean, look, the Vision Fund portfolio has over 80 companies. Some of them will be probably great investments and great returns. Some of them already are, for example, Garden in the United States. But there's many other ones that still remain under question, and we'll certainly be taking a look at them.